gonna begin in about a minute. I'm just setting up YouTube. All right. Okay, so I wanted today to be completely different from the rest of the Furious Mondays because as a mentor, I hate when my team is losing, and I am also very transparent when it comes to my own losses and so forth, if that happens. And I get a lot of private messages about with frustrated people last week, right? Last week I got a lot of complaints. It was a really bad week for most people. Some people, and yet the market was abundant nevertheless, but for a lot of people it was a losing week. And I get a lot of questions of, people being frustrated and how to deal with that and how to recover from that. And a lot of things make me angry, and um, I don't want that to happen. When the mentor is only as good as this team, so I take it very seriously. And it's not the lack of knowledge. So, and I don't know if you guys can relate. And this is so for the people that are here for the first time, this is not how it usually goes. I just wanted to try this out to see if people would appreciate, I don't know, seeing me communicating. If you want to unmute yourself, ask a question, at least for the first portion of our stream today. After I'll get into the charts and couple of setups that I have for tomorrow, I'll want everyone to mute themselves. I'm not sure if I can do it like for everyone. If I can mute everyone somehow, I'm not sure. I don't know. But the answer to the question of how do I deal with losses should probably be, well, I analyze my entry. I see if all my entry criteria were met, and I write it in my journal, and then I move on to the next trading day and go about my day without anything. The answer is, however, 100% different from that. The answer is most people, and I'm not talking about one particular instance of a loss, but what happens to most people, there's lots of scenarios, but you guys can either write in the chat if you agree with that or if that situation applies to you. But I'll give you a couple of things that happened to me before, several times, and nearly happened to me on Friday, which before I let that happen, I kind of made myself stop. So what happens is a lot of times people get on a good streak and you start trading good and you're growing in your growing account, and then um, at one particular, oh, that's great. At one particular day, what happens is you basically, or maybe at the end of the week, you give the money back to the market. Everything that you worked so hard and you just in 1, 2, 3 trades basically undid everything. And there is a lot of reasons for this. It could be that you got overconfident and you decided to over leverage shit. It could be that you didn't put the stop loss because you thought, it's not going to happen, I'm pretty good, or I'm a sniper, or whatever. It could be because you need to pass the FTMO so bad and it's your last day, so you decided to throw a Hail Mary. It could be a lot of reasons, but it comes down to mostly like, and I did an analysis over my team, and we have about 60 people in Furious Snipers, and there is a common thread. It's not the lack of knowledge. I'm pretty sure for the most part people understand how to trade, although gotta say, I don't know if any of you here been on WWA free webinar of lit presentation over the weekend. If you have, you would have noticed that About 30 minutes was knowledge. The rest was a sales pitch to get to their bootcamp, which is kind of funny. But where was I going with that? The thing, the common thread though is that it's not. Oh yeah, that's where I was going with that. As you would have found out in the good portion of their presentation, is that smart money trading is basically the new retail way. And you need to understand supply and demand interaction as well as liquidity inducement and when it happens and why it happens with order flow shifts in order not to fall in the trap of smart money traders, which used to work, back in the day, 4 or 5 years ago when ICT's videos leaked and Trade House started going, if you know what Trade House is, and I am, and so forth. When all that started happening, then it was working. It was literally as easy as, hey, find some equal highs, equal lows. I looked at my videos from 4 years ago, and I was even teaching people that way. Hey, you see equal highs, equal lows. There's that down candle, up move, imbalance, whatever, and you would get in and you would do it. Not gonna work anymore, because as more people start understanding this, way of trading, the algorithms and the people that create the algorithms, who I really want to meet one day, they now start hunting liquidity, because for those of you who are in Peter's group, that market needs to eat before it can move farther, and so it's important to have your criterion, whatever, in place. But the common thread in my team that happened is that there's two things. Number one is how you self-manage yourself when you're waiting for the trades. When you're waiting for your setup to play out, what do? Do you completely disconnect from markets and go and work out, have fun with your family, take your girlfriend to sushi? I don't know what you do, but what do you do? Or do you backtest? Do you stare at the market too much? Are you doing little research trades in between? What do you do? How do you manage your time when you're waiting, right? And the second thing is not being happy, especially as snipers and as looking at high profile traders like WWA, like what's his name, Sean Lee, like some educators in Trade House, in IAM, like some really good traders, or at least percepted good traders. We as snipers start right away wanting to go, hey, every trade needs to go to 1 to 25, 1 to 50, 1 to 100. You look at Reem and his trades and you're like, shit, why can't I do this? I'm going to hold my trade. And we forget about the bottom line in trading. And I'm being like completely transparent here. The bottom line is about why the fuck did you start trading in the first place and what you're trying to accomplish with trading, which is why I always say, and we'll get to this in the next section. By the way, I forgot to say, for those of you who are on YouTube, once Ryan gets on the stream, we'll address the questions. If you have questions in YouTube, I'm not watching it. I'm sorry. I'll get to every question later on. If Ryan doesn't get here, or I'll answer them. So if you need to, keep just asking them in the chat, in the comments, whatever. So where was I? Yeah. So I completely forget what I just talked about. Somebody remind me. Can we have access to recordings? If you're part of my team, you can, but no, all the recordings are always living on YouTube, right? If you go to youtube.com/Furious Snipers LLC, find us, go to recorded live videos, and then you'll be able to see any recording from, we're always recorded on YouTube for the public. Panelists.
You're talking
What's
about
up?
we're talking about trades going 1 to 5 and forgetting the reason why we started trading.
Hey, thank you, Mike. Yeah, that's right. So the reason we started, who raised the hand and why?
I did. I
Yeah,
want
go
to say
ahead.
something.
Yeah, go ahead.
First of all, I want to say that I've been doing smart money for a couple of years, like 3 years, and I want to thank you because I started smart money, then it didn't work for me. But I love smart money, but it didn't work. So I tried many strategies, but then, like a month ago, I started seeing your lives, and I realized something very important and really increased my win ratio and busted my account really good because of what you teach. Because I was looking for normal entries in smart money, and you teach me that if I look for that entries, I'm just a retail, and I will be stopped. And I start backtesting, looking to the market in the other way, like you're saying in your lives, and it really increased my win rate, and I want to thank you about it. Uh, and I don't know who needs to hear this, but I hate to lose. I'm a bad loser. I don't want to lose anytime at all. But I know that I need to manage my losses. I need to manage my feelings about the losses. Doesn't mean that I need to like losing. No, I can lose once, twice, 3 times, and still hate losing and still be profitable with that. Okay, you don't need to grab the losses and say, okay, it happens. No, you can hate them. It's fair enough. You just need to get yourself out of the market when you're not ready to trade in that day. If you don't want to take losses, if you hate losses, don't trade in that day. You know yourself, you know you will not manage to work well in that situation. I just wanted to say that and to thank you because you really helped me a lot in my way to seeing the market.
Hey, you're welcome, brother, man. I'm glad that some stuff is helping someone. That's why we're here, try to collaboratively improve everyone's trading. Yeah, so this is going to be a promotional break. If you want to know the real truth behind how to get in liquidity inducement Ethereum, you could sign up for a bootcamp for $5,000 with WWA, or you can sign up for bootcamp with myself and Peter for $150. So up to you. We pretty much teach the same thing, especially after attending their thing. Just a cheaper option, I guess. Anyway, so for those of you who want to know more about that, hit me up on Instagram or just directly, whatever. In any questions you got, I'll answer. So anyway, so come back to being happy, right? So what I always teach now it's part of the protocol. It doesn't matter if you're trading your live account and you're risking 1 or 2%, whatever it is for you. It doesn't matter if you're trying to pass the FTMO challenge and you're risking 0.5%. Always do twin trading. Always do twin trading. And of course, everyone's schedule is different. We have people that are like working full time and need to do more of a swing trading type of stuff. And we have people that are scalping, sitting there all day. We have different types of folks. So always do the 1 to 2 and 1 to your target. I cannot tell you how many times last week, if I only did that, would have prevented some break-evens and losses. Because if you know what you're doing with smart money or with the liquidity inducement theorem of whatever you trade with, there is a much better chance for you to hit a 1 to 2 than to hit a 1 to 100. And that ratio increases the bigger your stop loss is. And obviously you want it to be a small stop loss if you're good, but while you're learning and you're trying to increase it, it's much easier to get 1 to 2 than 1 to 100. No, Tim, it does not, because I didn't say double your risk. I said do twin trading, meaning take your trade, which is 0.5%, divide it by 2, 0.25, 0.25, go 1 to 2 on one of them, and go 1 to whatever on the other one. So what that means is you're not going to win as much. Where the fuck are you rushing? You're not going to be a millionaire tomorrow unless you buy a Dogecoin at 4 cents and putting half of your house in there. I should have. I did that. I bought it at 4 cents and sold it at 60. What's up? But anyway, unless you do that, you're not going to be a millionaire like tomorrow. And you're going to fuck up your FTMO challenge or whatever challenge if you don't do that. Now, especially when you're still not like a consistent liquidity inducement understanding person, like you're going to hit stop losses more often or break evens more often than not, especially if you can sit there and you don't understand where the market's going to turn around. So you can hit 5 1-2s and then lose the second part of the trade, which you will give you still 5 winning trades. They're just 1-1 winning trades. But at the end of the day, you're going to be 2.5% in profit, or if you divide by 2 for FTMO, you're going to be 1.25% in profit. I'm just saying, there's going to be times that you want to go, break even on the second one, and it's gonna go all the way, and you're gonna get a home run. But trying to get a home run on every single trade, you're fucking nuts. You're ridiculous. The second thing is, or the third thing is, people that don't put stop losses, right? Like that to me is like, you go back to square one. You're a gambler. You're not a trader. And the question to myself that I do when I do this, and I usually do this when I get greedy, which happens about once every month. I get greedy. What happens then is you're exposing shit ton of risk, but you're basically jeopardizing your whole strategy for what? So why not take a loss? I've been showing this from a stream to stream to stream to stream, where what's going on over there in the chat? Do you personally go 1 to 2, or as you improve, you tweak it possibly? No, always 1 to 2, and then 1 to 100 if I need to. So that's how I go. I mean, personally, that's how I do it. Mike does 1 single trade, Mike Azevedo, and then only puts the stop loss, takes partials at the break of structure, only puts a stop loss when you do the break of structure or when it reach the target TP. Like that's his thing. That works for him. Great. But for people that trade with what I teach now, which is liquidity inducement, the AMD, that me and Peter teach, the supply and demand, and there's a new thing that I haven't even, that I'm saving for the bootcamp, which I'm probably not going to say anything to. Hey, Ryan is here. It's one of the two, either Ryan or me, number 2, imposter. No, it's Ryan. Yes, and I can tell you for Mr. K, they advertise. See, I always say, guys, understand that Instagram is like completely opposite a lot of times of what happens in real life. I know personally several mentors that are broke as fuck, that are living out of an apartment with 2 roommates, collecting mentorship money to pay for their blown accounts over and over again. I know 3 at the top of my head, which I'm going to remain anonymous unless you really need to know. But they on Instagram look like millionaires. Like the only way to be completely honest even that can be fake, but asking them for their, what's it called? MyFX book or bank withdrawals. And nobody's fucking gonna give you, like, who the fuck are you to know what's going on in my bank? But that's why you can't really say, hey, he is super profitable trader. Like, there is people that you can say they're profitable traders because they take live trades with you. If there are people like that, right? Like Sandy Casper, for instance. They take trades with you, or they constantly tell you what's going to happen even ahead of time, and they get it right. And they're disciplined, like Mike, can hold the freaking trade for a month, and then he's profitable trade because of that. But if you're looking on Instagram, it's like, oh, he is the best. You don't know the half of it. You don't know the half of it. So 1-to-100s, like Wakar, Wally, all the people, like, they don't get 1-to-100s that many times. Reem does, but Reem he's not human. There's a difference. But like, I can tell you everything I do on a daily basis, the whole thing, no holds bar, which I'm gonna do on the bootcamp. But if you don't practice the back test, forward test, understand how the markets move, you're not going to be able to recreate what I do, yet alone what Reem does. No freaking way. I can record the video. I can give you every trade I do. Doesn't matter. You could tomorrow walk into a mentorship of WWA, do one-on-ones with Reem every day. You're not going to get it until you practice yourself. And that, how to backtest? Well, there's what I mean. Like, you have the rewind on TradingView, right? If you have the pro version, I think that's what gives you rewind. Yeah, I think like the first upgrade, because I have the best one, but I think just the pro version already gives you a rewind. And then if you want to do an MT4, you have the I can show you how to backtest in the next section. Just wait like 2 minutes.
Yeah, the free version gives you could backtest daily candles, daily to weekly, but the pro does.
Here we go. Hey Ryan, quick question. Can you log into YouTube and see if there's any questions or any comments?
Not yet. I
have a question. If you guys.
Hey Alejandro.
Hey, what's up? I have a question. So I was wondering about the FTMO challenge, for example, let's say the $10,000 one.
Okay.
So I was wondering about a compound plan for that. Should we just risk more of the 1% or like?
What do you mean compound plan?
To pass the FTMO challenge.
Oh, just to pass.
Yeah.
So I really like Sam's strategy, Sam Tukayev, because it goes with my blackjack strategy. I play blackjack. Okay, let me start sharing the screen. I'll show you. Okay. Okay, so it's very simple, right? He's been showing it like once. I've been showing it already many times, but it's very simple. You take a trade, let's say 0.5, the first trade, right? Okay. And for a second, let's pretend you didn't hear me about the twin trading. So let's say you go 0.5 and that trade loses, right? So now you're set $10,000. So what is 0.5 of $10,000 is 500? No, $50. $50, right? Am I correct? Fuck. $1,000 is 10%. $100 is 1%. 50. Yes, $50. Okay.
Yes.
Jesus. Let's see, long hours. So now you're at 9,950, right? Let's say you take another trade, 0.5, you lose that one. Okay. So now you're at 9,900. Okay. You take the third trade and you take a 1-to-5, right? Each trade, let's say you take a 1-to-5. Okay. That's all you need, 1-to-5. So then at 1-to-5, you just made $250, right? So 9,900 plus 250 is 10,150. Okay, cool. Now at that point, instead of risking 0.5, you're gonna risk 1.5. So 1.5, right? And 1.5, you're going 1 to 5. At 1 to 5, right? And let's say, for this example, let's say you pass it, right? That's 7.5%. Correct?
Yeah, 1 to 5.
Yes.
Yeah.
So you're at 10,900. Now at 10,900, you only need for FTMO $100 to pass, right? So in this case, you can risk 0.5, or you can risk even, yeah, you can risk 0.5, and at that point, you only need a 1 to 2. You only need a 1 to 2 to pass. Do you see what I'm saying? Now let's assume that you lost this trade. You're back at square one at 10,000, which is okay, right? So I can give you 5 trades in a row you lose, 1 trade you win, two or 3 trades in a row you win. You only need to go 1 to 5, 1 to 5, 1 to 2, or something like that. So that allows you to lose several times. Now, if you're losing more than like 5 times in a row, there's something wrong with you. I mean, basically, you don't understand how to trade. It's just it, right? So, and once you see, the thing is, the reason FTMO is hard is not because it's hard to get 10%. It's because of that 1 month's limit goes into psychology of people. They're like, oh shit, I got only 1 more week to pass. Like, how am I going to do this? How, whatever. And they try to over leverage. They try to get back to the market. They try to revenge trade. They try to do multiple trades. They try to come up with, like, sometimes, especially for people that trade on a higher time frame, sometimes the market fucking ranges. And unless you're trading on 1 minute, you're not going to scalp 1 to 10s. So but they try to come up with like these IFCs and shit. Like, here's the thing. Let's say the market comes here. You guys can see my screen, right? Yeah, okay. So let's say the market comes here, boom, right? It creates this range over here. Right? It creates the range between these 2 points. And then it comes here and starts doing this. Maybe it shifts the order flow, but it starts doing this. And people, instead of waiting to see what's going to happen, well, now we're talking about inducement, liquidity, and order flow shift. But instead of waiting for the setup, they try to come up with some bullshit on 1 minute over here, trying to get into, hey, look, that's a FU candle or something that took that liquidity without any confirmation, without any kind of stuff, because they need to pass the FTMO. And that's the problem. So once you do this and you pass your FTMO, doing this, after that, on my, like, this is what I do. On my FTMO, what I do now is I don't get into stupid trades anymore. Right? I just trade only the best setups, which comes to the second portion of my presentation today, I guess. So I wanna talk to everyone individually. Like, feel free to unmute yourself, and talk to me about something maybe I didn't cover, as far as about how to deal with losses, and personal experience, mindset, or like what's going on. If anyone has anything to say or comment about it, I'm free to address it. Yeah. If not, I can just keep going with with some amazing Euro USD trade that happened
Also,
on Friday and today.
Also, all of the recordings, guys, are going to be on YouTube always. So I know a few people are asking about it. It's always there. So just jump on there.
That seems
Alejandro,
super
dude, I
simple.
see your doppelganger.
A
Look at
what?
the guy named R. He looks like you. It's hilarious, dude. Looks like him.
Hey, I got a quick question, actually.
Dinero, what's up, buddy?
Yeah, do you have a preference when it comes to funding for a prop firm?
Yes.
What
I
might
don't know
that
if
be?
I'm supposed to say the trading, theproptrading.com.au.
Okay, I was going to say direct message.
Nah, it's okay.
All right.
I mean, why not? I'm just gonna tell him. There is 10 reasons why I like it more.
Would you like to elaborate on that?
Sure. There are no commissions on anything ever. Spreads are anywhere from 0.03 to 1 pip. That's it. The split is 80-20. The cost is $100 to $200 less depending on the challenge. There is no restriction on holding the trades. You can trade robots, EAs. How many is it? 7?
Yeah.
Let's see. There's no longer a restriction on how many days you need to trade. You don't need to trade 10 days. If you pass the FTMO in 1 day, you get the second part of the challenge right away. Customer service replies within seconds, sometimes on the chat, and maximum 24 hours. I never had problems. Like one time they withheld my, I didn't get a paycheck, so resolved it very fast. The only thing that I don't like is the spreads on crypto are absolutely ridiculous. You cannot, you can trade cryptos, but it's like 120 to 160 spread, which is like unreal. So that's the only thing that I know that's bad with them. Yeah, I'm sure I'm missing some information on what is awesome about them. I already forgot.
Perfect. I appreciate that.
FTMO is good because the name of the firm is not FTMO. It's theproptrading.au.com and .com.au. And they actually improved because as of last week, they have added the tracker. There used to be no other way but besides MyFX book to track your progress. Now they added the progress similar to FTMO that shows your graph and how you're doing. They're constantly improving. I really like that. But the fact that there is no commissions allows you to literally put when you put your break even 1 pipette above your entry, so you'll get like 11 cents or 10 cents or whatever the fuck. But you don't need to account for the spread or for commission or anything like that.
Sweet, I appreciate that.
Yep. No problem. Okay. So let's talk about, unless there's more questions, you guys just feel free.
I've got a question. Can you hear me?
Hey, Alejandro number 2. What's up, buddy?
My question is, I'm sure either I missed it or you're going to give information on it later on regarding your boot camp. Is it just on the inducement, or is it about Wyckoff as well?
Inducement has nothing to do with Wyckoff.
Yeah, is it going to go over 2 things, or is it going to go over the one?
The bootcamp is going to include elements of Wyckoff. I should say, I would say the AMD, which is accumulation, manipulation, distribution into mitigation, is a simplified way to look at Wyckoff with supply and demand, which if you haven't been obviously on my streams before, you probably don't know. But it's instead of you sitting there and figuring out, is this the secondary test, or is this a up thrust, or is this a, what is that? Or did it break struct? Instead of doing all that, you concentrate on the range and what they're trying to manipulate, the top or the bottom, and understand where, like, what the actual stuff, where the liquidity sits and where the banks got in is more important than labeling how many times they test the area of supply or demand, if that makes sense to you.
Okay.
So there will be, I mean, I can describe to you Wyckoff as well. So this bootcamp, I really have no idea how long we're gonna do it, because we kind of decided that we're gonna go forever, meaning until people run out of questions at the end. We're gonna have a crap ton of examples. So if you want me to, like, there's something in the chat. Okay. So if, for instance, I'll show you, like, you could look at this and I can mark up redistribution for you right here. Okay. Or I can mark up redistribution for you right here. I can make it work, right? Put the labels in there. And I can explain to you why that is what it is, and why I'm waiting for a last point of supply over here, which I'm jumping ahead. But it's much easier to understand how the AMD works and how the ranges work than marking out Wyckoff on any chart, on any. Just want to get something that's not as I label everything. So, I'm gonna try to find something that is not so dirty. Okay, this gold is fine. Like right here, right? You could say this is accumulation, right? You could say this is this on a smaller time frame. This is accumulation, and that's a spring, and now you're waiting for a test or something. You could say that, correct? But I can say that ooh, thank you. That is the range right here. That is the intent. That is the manipulation. That is distribution. And now we're waiting for mitigation. What's easier? Marking up Wyckoff, trying to figure out all the stages, all the phases, all the stuff, or understand what's going on here. So but we will cover a little bit of Wyckoff as well, to answer your question. But bootcamp is going to cover way more than just inducement. We're going to cover structure. We're going to cover order flow. We're going to cover supply and demand. We're going to cover range interaction. We're going to cover entry protocol. We're going to cover so much shit. Mindset. We could, like, mindset alone will be like an hour and a half at the beginning, I think. There's going to be stuff from like the top-down analysis, everything, just everything. How to understand if it's a continuation versus a reversal. Like even some stuff that I'm still keeping a secret. We're gonna cover box puddles.
Sounds exciting.
Yeah, and I know, and I wanted to at first to make it a lot more expensive, but then I figured, my biggest thing that we stand for is that we make money from trading, not from fucking courses or bootcamp, which I can tell you from this weekend that if WWA are doing $5,000 normal and $10,000 VIP bootcamp for lit Ethereum, and there's 2,400 requests to join, that is maybe $1 million, maybe $2 million just from that, maybe $4 million if everyone buys a VIP package, which is not going to happen. But I'm just saying, you understand that, like, that alone will fund their accounts to trade for fucking 5 months after that, if they want to. So do I know that Reem is an amazing trader? Yes. Do I know that Alex and Bakar Valley, they are? I don't know. I've met them before. I don't know what they're doing for sure. I know they're teaching basically the same things. I know they have an amazing programmer now. I know that they're doing a lot of stuff for their students, which is amazing. But I'm saying that that information is not worth $5,000 and $10,000. It's not. The bootcamp is on October 9th, and it's at 1 p.m. Eastern, or 1 or 12. Shit, I can't remember. I think it's at 1 p.m., but yeah, 1 p.m. Eastern.
Up on Yuri's Instagram. It's under the description.
Yeah. Go to my Instagram and then type in, sorry, in my profile, there's a link. But it's just furioussniperslc.com/fx-bootcamp. Anyway, where was I? I hope that answers question about the Wyckoff. We're good? We're good. All right, so let's talk about this amazing stuff on Euro that I did, like this whole study on it today. I've been busy. So on a daily perspective, so just so you understand the basics of inducement, I guess there's so many now. What I'm finding out, I'm still learning, guys. I'm still learning myself, doing like incredible things that I didn't even know, because you never want to stop learning. If you fucking don't learn, if you get the ego going, that's just the humbling moment just around the corner. Trust me. If you start thinking that you are the freaking shit, you're like, it will always humble you. There's always someone better. There's always something to learn. Even gurus, like, they combine forces and learn from each other. So anyhow, right here on the daily, you can see that this right here, right? You can say it got into some kind of IFC, right? And then it went up, took out some liquidity, but it did not take out the range, right? So this is the range. You see the range on the daily, and these concepts work on all time frames, right? So this is our range from here to here. This low created this high, right? So we're bullish on daily, right there. We're in that range, and this here came into the IFC, and normal people would be like, okay, this is my target. Instead, what they did was targeted the liquidity, which for a lot of people that don't look at daily and trade on stuck on one time frame with tunnel vision, they would consider this some kind of, institutional candle, which would, sure, on a smaller time frame we do, and we have a reaction that is pretty good, but they don't see this wick, which basically, if you think retail and like hedge fund retail, that's your resistance, that's your support. So if that's the resistance, everyone in the world will put their stop loss on this wick, right? So that's liquidity. So this whole mitigation out of here was to take this liquidity. Now, what I tell you, market has to eat in order to move. So if we ate from this side, we're going into the high. What do we need that for? Well, we need that to take out this, which makes this whole move on a larger time frame an inducement, right? Inducement meaning too early to buy. And understand that not only day traders trade. There's position traders. There's swing traders that hold this forever, hedge funds and all that shit. So obviously, there's still a lot of traders that on a smaller time frame see how bullish it is, and we broke this structure, right? Broke this internal structure. A lot of people will say, well, here's your IFC. This is smart money basics. This is why they don't work, because you right away think, oh, imbalance, all this bullshit, blah, blah, blah. But that is what they're targeting now, because they know people are smarter and people trade this. So the market came out and took this internal liquidity out, mitigating more out of here, right? So at that point, I think we're done. because we already took this giant. There were so many people that we took out giant whatever, and we also intrigued all the, induced all the sellers, the sell stops, right? Sell stops got triggered. People FOMO'd into this candle, which is like, what is that? 30 pips or something. They started going, oh yeah. The structure is bearish. Look at this. We're breaking. We broke. So now people are trying to sell here, and again they get trapped by this market going up. So this just by a pip, I think, took out this, giving us the intent. So we're bullish again. Now, if I go to switch to 1 hour, I can see what happened on a granular level. We are coming up over here, right? And you can see that we're keep pumping the price up last week, right? Or before last week on Friday, we pin this at the even level, pretty much 1.1900, which now you can see, by the way, that I added something to my trading arsenal, which is quarter points. I've used to do them, but mainly whole levels and half levels. And if you want to know about, well, this is the one, my programmer created this indicator, so I don't know if it's free or not, but it's called round numbers. But you can just, put lines at round numbers if you want. Anyway, so once you go over here, we switch the order flow on the 1 hour. And now what are we doing this for? So we just took out some stops, created this double top for later, maybe triggered some buy stops, and then we went away. So we broke the order flow. Now let's see what's happening here. The market took out liquidity all the way in here and then went all the way over there. If you think basics and you think, okay, this whole range went over there, where do we want to shop? Where is equilibrium? Equilibrium is at 50%, right? That's right here. Okay, so equilibrium is 50%. Now, when the market is coming here, people start getting into trap. Again, smart money, you just follow the structure and you start doing stupid shit like this. 1 second. Hey, look, it's an IFC. Why the fuck didn't it work? Look at where you're at. This is the move. 50% is here. Are you in the premium zone? Or are you in discount zone? Or are you in too expensive? Right? You always want to shop at a discount. At least 50% on Black Friday. Right? You don't want to fucking shop over here. Because look, where did the actual bank get in? Think about it. Where did the bank get in? Where's the order flow? That's, I said the 4 questions you should always ask yourself. Number 1, where did the bank get in? Number 2, where is liquidity? Number 3, what's the higher time frame telling me? And number 4, what was number 4? Where is the order flow? So if you look at where the banks got in,
I think retail traders.
Yeah, and what the retail is exactly. What's the retail traders doing? Thank you. I forgot my own thing. That's why I have it written down. I got dementia like Biden already. Sorry, political joke. Anyway, so you can see right here when the market came into the zone, right, and then took out the early buyers. Here's the inducement up. Then take the stuff out, and then the market exploded. You can see this market exploded right here, which is right below 50%. Okay. So what is all this? That right there is the inducement, a different type of inducement. This is inducement for buyers to get in more buyers, get more buyers, so that on the way back, they can pick up all of that thing is liquidity. So this morning, well, sorry, let's go step by step. Friday was an incredible day if you saw what's going on. So let me show you. So the Thursday here created the low of the day. And the high was right here. So we were in this range. Okay. Then the Asian created this inner range. Here's the high. Here's the low. Now, this is like for you to understand. We go up like crazy at London Open, which is the kill zone. For those of you who don't know, it's basically the primary area where the market will either set the low and the high or take out stops and reverse. Always. London kill zone, New York kill zone, and Asian kill zone for JPY pairs. So during the market open, we slam the price up, take out the high of the day, of previous day. You see that? The high of the previous day, you get taken out. Guess what? This high is at 1.1850. Woo, surprise. Half level. So this low is at 1.825, quarter level. Are you telling me it's a measured 25 pip move? Yes, it is. We took out the high, and then I went to 3-minute, and we shifted the order flow over here on 3-minute. So I can show you on this even, but let's go 5-minute. I can show you. So that's another thing I learned of how the order flow shifts is very like cosmetic thing. So you can see this last expansion of the market. This is the last point of liquidity, this green line. This is where the last expansion of the market happened. That's the last time they got in with the buy. They put $100 here and $300 here, whatever. So that is the last order block. You can see that because we have a reaction from here. So here's the reaction from this level. Let me know if you guys are confused. This right here is the reaction from the last point of demand, which fails to create a higher high. We then proceed to break that point that did create that higher high, break all of this liquidity, right? And as we were doing, we were mitigating through and found this exchange point. This is the last exchange point right here. So the market came back to it, tapped into it, and then broke this inner order flow and gave you one more entry later. Just came back for the stops and look, another right here. Right, here's the pin hammer engulfment. If you know your candles, it's another thing I'm adding to my arsenal. But regardless, this is the last order block right here, right, with the balance right there. So it tapped into that. And again, another order flow shift right here and another entry opportunity right there if you wanted to. So does that make sense? Oh, what the fuck? Why is it white? What's wrong with you? So does that make sense? So here's another order flow shift. This low makes, this is the high, and this fails. Then we get over here. I would say, yeah, this is the high. That is the lower high. Then we break over here, and we come back right into it. And then look at this order block here. The price dies, like runs away and never comes back. So once the order flow shifted, you know this is the last point where that got in. It is. There's like giant gap in the price, right? So that's a true order block here. Now, what does market did today? I told you from the higher time frame, what we did was we needed to clean out. Now, so we took out the high, and after the our entry and order flow shift entry, what do we need to do after that? Where is the target? After we broke this and we took out the liquidity that was on the top, the range was between here and here. That was our original range on Thursday. Low of the week is here, so that's even bigger range right there, right? That's the low of the week. We took out the temporary high of the week. So that is the major target right there. So they slammed the market on Friday and kept slowly taking out people that are trying to, if you just look at this part as a smart money trader, you start doing stupid shit. And the stupid shit is right here. Low, higher low, break of structure, high, I should get in here. I should get in here. Maybe this is inducement. Maybe I should get in here. That's what you start doing. That it makes you a machine that doesn't understand anything what's going on with the price. You don't understand the ranges. You don't understand the low of the day. You don't. You're just trying to see every single imbalance and level that's here without understanding what is structure doing, what is prices doing. So now that you understand that, look, this was the inducement up, the last expansion of the market, the order flow shifted. Clearly, they have a purpose. So now we come back to the beginning of the thing where I told you the equilibrium from this whole expansion from the daily is right here. And what do we have here? This is where the banks got in, right? This is where the banks got in. This is where that buy craziness started, that pump. What's this? That is called the breaker, right? No, price did not come here to fill this imbalance. I'm going to argue with anyone who says this is, well, this imbalance is 50%. Fuck you, excuse my language. It came here because this right here is the breaker. Why is it called the breaker? Because, not only because the structure was broken here, mainly because this is an FU candle that took out liquidity here, then took this, so broke structure. But this right here was the reaction, and at this point the demand was bigger than supply, and so it broke through that previous FU candle. But they still have money there because that was the buy to sell. So that's why the market came back to that point today during London. So what did London do? This is some crazy stuff, guys. What did London do? Oh, it's a buy cup now. We came over here. London open, gave for that entry that you wanted into that IFC. Here's the engulfment. You guys see the doji and engulfment right here, right? So you could say, hey, well, I can buy here, but this is crappy price action. It's Monday. You don't trade on Monday usually. Anyway, so this established a low. This is the first reaction that established the high. So now your range of the week right now, that's your low, that's your high, right? So then we came in here again. This is the initial reaction. What was this reaction? Everybody thought it needs to take out the high. Did it take out the high? No. Why didn't it take out the high? Because it created the range. If it created the range, what are they doing? What did I say? If they want the market to move, they need to take liquidity. So if they need to move it up, they need to take liquidity where? From the bottom. So if this didn't take out this high and price started turning around, you can't be in this trade anymore. They need to get out. They need to, you need to get out. They need to take out this quick and establish the low before moving farther. So this was my IFC on a 4-hour, actually on a daily even, and I told you. So when the market, I am sleeping during London. I woke up and I saw this. So I knew this was my target. Now, if we come to 3 minutes, what I want to see is exactly this. I knew this was my target. Here's your compression. Here's your accumulation. So yes, if I go to 1 minute, there's your, for the guy who asked, selling Climax and AR and ST and UT and blah, 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 and here's the spring. Boom, here's the test. Here's the signal of strength. Here's your LPS. Boom.
Yes, God.
Your whole wake up, right? Or I can tell you, we have compression. We accumulated. We broke the range to the top, giving us a clue to where they want to take the market, right? They induce people to go up from here too early. They take out the stops, right? That's manipulation. And this is something that you need to be crazy like me to understand, because something that is going to be on the boot camp. Here's the inverted, or sorry, here's the pin bull hammer right here, and the engulfment right there, right? You see that? Technically, that right there is telling you we're turning around, and we came back back into it. Broke structure. Here's your entry. 2 entries, right? Always 2 entries. Last point of demand or extreme if it happens. Okay, so you were able to enter here and go up. And then once you did this, what's the range? This is our range, right? We took out the low. What's next target? This part of the range. So you could have easily targeted this. You could have easily targeted the high of the Asia here, or yeah. You could do that. You could get out there, or you could wait. So here's your 1 to 2, 1 to 5 trades easily if you want. But I know the bigger picture. What's the bigger picture? We just discussed it. Let's go to 15-minute again. The bigger picture happened on Friday when that order flow shifted, right? And they ran away from here. They never got out of this order. This is where the order flow ends. There is nothing that tapped into it. What is all this? That's the opposite side of whatever. And we only got to 50%. So the intent is to go lower to where they got in over here, where they manipulated the market on the bottom. So we can go to 70%. So that's where they're going. But in order for them to come down, they need to take out liquidity at the top. If there's no liquidity at the top, they need to create. Guess what we're doing? We are in a range creating. Oh, by the way, that was all my confirmations for the bottom trade. But now we're in this range, pinned to the top. So pin to the bottom, pin to the bottom, so top. So we have that range right here. And above this range, we have all of this liquidity here. And we have an entry, which is the last mitigation they did, which never mitigated with imbalance engulfing everything for our entry to come down. So hopefully this is me predicting because I see the price right now. It might completely change. You need to see price action. But ideally, it will come down during Asia, come lower. During London, it will explode up, take out the top side liquidity, come in to mitigate, and then drop down under this current low. To establish the low, most likely it will just come down to this 1.750. Guess what? This thing here where it stopped is 1.175. Right? Another measured move. The next one will be, what is this? 1.825. Another quarter point. So from here, we're going to come to at least 1.175 even, or 1.17. That's a setup that I have, and I am, again, what are you going to do when the price comes here? If you want to put limits, especially, You're gonna put 2 positions, 1 to 2, 1 to right here. If you're doing an FTMO, you're gonna do 0.25 and 0.25. You're gonna get your 0.25, 1 to 2, and then you're gonna go and more people that are not promoted, I guess. And then the second one is going to be 1 to whatever. You know, like if you go from one, like look at this. This is 1.1825 to about 1.1830. Maybe you want to go 1 to 1.833. That's like 7 pips, right? So if you go 1 to 2, you need 14 pips. If depends on how big your stop loss is. But let's say it's somewhere here, 5 pips, right? So you need 10 pips to just get to here, which I guarantee you will. But your target should be this low. That's 57 pips. Now, 57 pips on your challenge at a quarter, that's 2.5% right away. So the next trade you're gonna do, you going to risk 2.5%. You need to 1, 2, 3 to pass the challenge. That's it. 2 trades, pass the challenge. Get out. So that is the whole process of how to basically, you know, identify the range, understand if they manipulate the top or the bottom, have a clear picture from the bigger time frame of what they're doing. Ask yourself questions. Where did they get in? When was the last point of expansion? Where was the inducement? All these questions need to be answered. So, but if you understand the ranges and understand what they're doing, you can always trade at the extremes of the range. And at most you will lose, you know, your little 5 pips or whatever. You will never be stuck in here. Which brings me to the last part is you should only trade. I mean, you guys can do whatever you want. This is how I trade. During the hours of London kill zone, which is, what is that? London kill zone. 2 a.m. Eastern to 5 a.m. Eastern. New York kill zone, which is 7 or 8 a.m. Eastern to 11 a.m. Eastern. And Asian kill zone for the JPY and Aussie pairs is between 8 p.m. and 11 p.m. That's when they move. Because during that time, just like here in London, we will either this London establishes the low, right? Establishes the low so you could take a quick buy if you wanted to, or during New York, it continues, or it just depends on each pair, or it will do this perfection, right? During the kill zone, take out, stops, reverse. That's where the move happened. Manipulation, switch of order flow, get in. Yeah, and actually New York was the perfect entry. So it actually did the takeout. I mean, if you understand on the smaller time frame how order flow shifts, you could have taken it there. But if you missed it, New York Open was a perfect mitigation and an order flow shift. The ideal entry was over here on Friday. So other than that, during the rest of New York, you don't want to trade here. Why the fuck would you want to trade here? Why the hell would you want to trade here on EU? Like, no, this is the range. You shop at the extreme over here. You shop at the extreme over here. You just need to know if we're continuing because we have a bigger target low, or we're reversing because we took out the liquidity. All right, so I know that was a lot. Thank you, Ahmed. So you want to mark up charts a little bit earlier. So like typically during London, so Asia usually it depends on the cycle, right? The cycle goes, if you know the Wyckoff cycle, you know, it goes up and it goes down through distribution. So in a week, that also happens. The week can start on any day of the week though. So you need to know where you are in the market cycle. So if you've been going down for fucking for a whole week, chances are you're probably going to be reversing. But what you should do is whatever session you trade, get up half an hour before. Start marking up your chart. Start identifying the ranges and seeing if we're going into the range, because we have going into the range up because we need to break down.
You know, do you see what that is, Asha? What that look?
I don't know.
Yeah. Depression.
Forgot, guys, mute yourself.
This is so the white calf.
Muted the person. So anyway, so that do we have questions? But yeah, markup chart. So half an hour before those times that were posted, half an hour before that you wanna get in, because you want to basically. So typically the 3 hour window, right? Typically the first hour will give you the manipulation or establish a low or a high, right? Typically. The second hour is most of the time is when you're going to be shooting, when you're going to be looking for an entry.
Yeah. Here, I have a question. So I know you're familiar with like the schematics, like selling climax, AR and stuff. So like, let's say, for example, on your POY you're at your POY, and let's say, how long would a schematic take to, like, for example, a 1 minute schematic? How long does that normally take to?
I would say on 1 minute it could take about
like an hour, or like
under an hour,
30 minutes,
like 30 minutes to 45 minutes. I mean, it varies, but yeah, about that much.
Okay. And what about like for like 30 minutes and 15 minutes?
Shit. 15 minutes could no, not a week. 15 minute could probably take 8 hours.
Oh shit.
Yeah.
Our chart could be a couple days.
Yeah, our chart can take you a day or 2 days. Yeah.
It depends on what it is too. Coming off a weekend,
like it depends on the schematic, and understand that the schematic, like a good example is gold. Like if you look at gold on 15 minute, we're building a schematic right here, right? So this is 15 minute. It's 1 day. I mean, there's schematic within schematics, right?
Yeah.
So this is a long schematic. Here was one schematic on 15 minute, right? Right here is the redistribution.
Share screen, bud.
Oh shit. Excuse me. Sorry. So yeah. So right here, the schematic on 15 minute, that's redistribution, right? See that? Redistribution. That took about what, 1 day, right? But if you go to, let's say, 1 hour, or maybe it's 2 hours, it's still building. The schematic is still building.
It's like 4 days right there.
Yeah, so this is 2 hours. It's already like 4 or 5 days. So it just, markets are fractal. So again, you're going to be waiting for a while. But the main important part is, even with Wyckoff, is to understand, are they manipulating the highs or lows? So if you look at just this, right, and you look, we're coming up, we're coming up, we're coming up, we're coming up. All of these are, this is a suck you into a buys, and the lows are remaining intact. That's like a telegraph. You're going to crash. You're going to go down, because these are intact and the tops keep being broken. So 1, 2, 3, 4, and down you go. Like that's what Mike talks about. 1, 2, 3 drives up, a minimum. So that's what you have, right? Versus accumulation, when you have manipulation of the lows in order to go up. So So yeah, I wouldn't concentrate on how long it takes on each. I would rather understand what price is doing. Identifying the range, even in Wyckoff, I don't think you need it, but even in Wyckoff, that's number one. Like, where is your change of character? Where is the change of character, which establishes the range? And from there, you can figure out if they're manipulating highs or lows. And that helps you determine if we're in accumulation, reaccumulation, distribution, redistribution. Okay. The lower target for the EU sell is the premium zone on the daily trading range. The lower target for EU sell, yeah, it's a discount zone for the daily range, exactly. Not the premium. The premium is at the top. The discount is at the bottom. So, or is it the other way around? I can never remember. Maybe you're right. So yeah, like daily. Again, very easy. So you see how this is the low of the month. That's the high of the month. So that's the range. That's our range. So we're here. We failed to, well, maybe we just tipped whatever. So our retracement has to be at least 50%, which we just did today, exactly where. But the actual area here is right there, or even 71, 61, anything below 61.8 is right here, right? And then the extreme area is all the way at here and below, like 1.7000. Like I said, it either will react from 1.750 or 1.7000, and doesn't have to be precise. It could go just a little past it, like 5 pips or whatever. That's the main area though. That you need to concentrate on for measured moves. But this was where the market broke this from this, as they call, as Mike calls it, slingshot. So you should see an order flow shift, a Wyckoff accumulation on a smaller time frame, whatever, in order to get in here. But it's going to be, sorry, right here. But it's going to be below 50%. Yeah. So this is the lowest target on a smaller time frame. Smaller time frame helps you identify what's going on. That's why you need multiple analysis. Like I said, here is where the manipulation occurred. And because we manipulated down and then took out stops already, unless we come here and have a shitty reaction and just accumulate as opposed to shift the order flow, and we're just, very, very poor reaction here. For the most part, there's not going to be any stop losses here below this wick. So, like, this is the lowest it should come, ideally. This would be the lowest it should come, like right here. If it takes this wick out, we're going lower. Yeah, we're going to, yeah, I would be reconsidering what we're doing. We're probably going to be bearish from that point, because this is where the banks got in, right? So it just depends. Right now, I'm concentrated on this sell, because they just took out a shit ton, all of this liquidity. They took out all of this liquidity. They took out all of this liquidity. So the next move is to create liquidity up, take it out, and keep going. In order to continue moving, they need to eat, right? And then before this, on Friday, they took out all of that. There's nothing here, nothing at all. No one's shopping here. There's no retail. There's no money sitting here. Money is still below. There's still below money. There's still below money below this stop. So they need to make it look like they're going up, They're reversing. They need to make people buy. They want to make people buy. It's not even a question. They might come here. You know, they might come here and then break the structure and come here and do one more push again, like a double top here, because what that does is tells people that, you know, they can do many. I've seen this many times where they like break structure. So most people that just look at smaller time frame, they will say, okay, here's the IFC. I want to get in here, and then they will come down just close enough, but they will go up from here, and people will be like, shit, it left without me, like five pips without me. How many times it happened to you guys? And then it will come here, and you'll get FOMO, and you start buying, forgetting that the structure is bearish, and this is where they're sitting. So they'll do this second time, create the equal high, and maybe just take out a little bit, whatever. Basically create this M, and then it'll crank the market down. Yeah. Exchange point. The exchange point is, Ahmed, is where used to be supply or used to be demand, and now it turned to supply. So let's say here, I'm gonna clean up real fast. I'll go over here. So let's say you got, what are my tools? Okay, let's say you got over here, and you're going up, you're going up, you're going up, and then you just slam down. And you're like, what the hell happened? Market was bullish. The shit happened. Why this IFC didn't work over here? So then the market comes back to the last point. That's your break and retest, right? So that is your exchange point. If the market decides to come down from here, this was the last demand that created this last expansion up that took out the liquidity, and we broke through the structure, right? And we came back to this last point of expansion, right? This is where last demand that pushed this price. Ideally, you would see a reaction from it, like a wick from here, that fails to create a higher high. But sometimes you don't get that. Sometimes you get that giant imbalance here, which people say it comes to 50% imbalance, but it just comes here. Still, understand that a lot of times what is going to happen is they will show you this, because that's the retail trade. Supply turns demand, or support turns resistance. So a lot of times what they will do is come to the exchange point. You got your trade. Everybody sees the break of structure. And then it will come up, take out stuff, come back to where the last time that the banks got in with imbalance, blah, blah, blah. The IFC at the extreme or something, and then we'll move down. And everybody's like, what the fuck? We broke structure. We broke this structure. We broke this structure. It was supposed to come to here. No, you're not seeing the bigger picture. You're not answering the question of where did the bank get in? Where did the bank get in? They got in here, which means they had to, this whole thing was the setup, manipulation before they moved down. So where is the last point of liquidity taken? That is the expansion. That is where you should be shopping within the range. Hope that makes sense. Okay, that's the exchange point. As long as you understand that, number one, always twin trade, 1 to 2, 1 to whatever, then you can't be burned. The only way you be burned if you self-sabotage, what we talked about at the beginning. If you self-sabotage, if you don't stick to your plan of like, guys, understand, it's been like, well, excuse me, it's been like a year and a half at least since I demonstrated this. It takes 14 doubles to make from 100 to go to 1.6 million, 14 times to double your account only. And it takes exactly 20 days, risking 1%. It takes 20 days of getting 50 pips a day to double your account. 1 month to double your account. Just taking 50 pips every day. And I can guarantee you that getting 50 pips is a lot fucking easier than getting 150. Every single day, the market moves 50 pips, at least. Especially on Great British pairs. Great British Pound, Great British against anything. Especially CHF, JPY, and USD. GU is probably the most volatile pair of all, other than gold, which is not a really a forex pair. To find your start, how big should you make the chart, Joshua? What do you mean?
He's asking what time frame.
So get this. So the NFT I bought, obviously I bought because it was a good project, but Hulu and Netflix just talked to the creators. They might make a TV show about the NFTs. But understand, since we all own these NFTs, in order for them to make a TV show with our NFTs, they have to have us rent it out to them or whatnot, like whatever they decide, and we get royalties in that. If it goes through, it's not for sure. But the community is so good. I paid, like I said, about 2,000 for it. Right now, 2,000.
All right.
All right.
Okay. That's enough of dinero. Man, I knew this was gonna happen. Okay. How big should Joshua? Are you there? I think his mother.
Yeah.
I do not know. I made sure to find your structure all the way in, and that confuses me. So I'm not really sure what you mean by that question.
I think he's talking about time frame, man. I think he's talking about like daily 4 hours.
I say daily at least. I mean, Peter would say monthly, weekly, and daily. I think it's a little crazy. I think it's okay to look at monthly, weekly, once a week, maybe like when you're doing a top-down analysis the first time at the beginning of the week. But at that point, like, I understand what daily did, and I showed you on EU because that's the pair I trade. I showed you that the inducement happened. We took out the inducement, and now we're going up because this is the target, and that's where the bank got in. But I think we're going to be bullish anyway. At the very least, even if this was a retracement, I was wrong, and we're doing some kind of wide cover, we still need to come and fill this imbalance at the very least. So I understand that daily is bullish.
Good to know.
Am I sharing screen?
No.
So I'm not sharing?
No.
Fuck.
You're not. I know.
I always do this. Yeah. So this is what I was showing. Like, if I'm wrong, it still needs to fill this imbalance over here. It still got to go over there. And I understand the daily is bullish. So from that understanding, because we already took out the inducement and we need liquidity to move, and we took liquidity and now we're moving. The same thing happens on the smaller time frame, but they got to build the range and they got to take out low to go up and all that stuff. So daily is far enough. It's okay. Okay. Yeah, exchange point, like I said, it's okay as long as you know where you're going. But I always look for AMD into the exchange point, Wyckoff redistribution into the exchange point in order to take the trade. You can't just put a limit at an exchange point. They will take your money.
Right.
If it's too obvious, it's probably wrong. Understand that. They can see your money. Not your money, but everyone's money. Okay, odd CAD. 4 hours, huh? Could very well be. However, I need to see what's on. I mean, yeah, this could be. This could be. You got in there or not? Or you? Oh, you tried to get in? No, you already got in, right, Brandon? I need to see what happened here. I need to see. We're rejecting, but we're failing to break the highs. I need to see. It's very possible that it just might stop over here at 9250 and then keep going up. OddCAD, let me see, let me look. Okay, I can't, I hate my screen. All right. OddCAD, he said. The man said OddCAD. Ooh. So looking at daily. Hey, look at that. Oh man, it might look very good. Not sure what it's doing. It's got ways to go down if it needs to, but it could retrace. And there is this wick that I don't like at all. Let's see. Yeah, once again, we took out this. This does look like beginning distribution. You got to be careful though. I mean, where you pointed though, like, so this is exactly what the exchange point happened, right? So this was the exchange. And you can see, once again, this right here came down, created the range, formed a low, had the high. This was inducement. We took out the inducement from the exchange point. And then we're now in this new range here. So most likely you are correct. Most likely you are correct because, I mean, it could still, you see how there's still space. It could still come here. It could, I need to see in smaller time frame what's going on. Yeah, it could still come into here. But you got to get ready to trade in the hours of 8 to 11 or at London to see. So right now, this is the previous week's low. So if we go to today, man, we're just ranging still. So if you go to today, the low has been established in London, mitigated from here. The low has been established and the high has been established, both established during London. Now look at this. We went into the high and took out the high during New York, right? Mitigated coming down. So we mitigated and the order flow shifted right here. Once we started mitigating right there, we broke through this, mitigated again. So order flow is bearish. The target most likely is here. So now you gotta see if they're gonna take out this low, and at the same time take out this low, or if this is the low that they'll take out before they go up, because they could use this low as the inducement, right, for all the buyers. Now they're gonna take it out into here and go up. They could, or they could take out the low, the full low, and then you know you shift it, and you know you're going down after that. So it just, like, you got to be careful. And understand that if they take out this low and have a giant reaction, you got to see the pattern. You got to look for some kind of bullish order flow switch, because if they take out this wick and have a reaction, have an order flow shift, they're going up one more time to take out this high here, if not all the way to this range. You see this big range that we established last week? Take out last week's high before coming down. But it's hard to tell right now. Right? We're in the middle of garbage. This is all garbage. You're in the internal range of the external range. So that's what you gotta see. So if they take out and have a reaction shift, expect this high to be taken into where the bank got in, because we haven't gotten to mitigate it fully. Or maybe we did. Maybe, nope, we did not. So, gotta be careful if that's the pair you trade. I never trade AutoCAD anymore, so I don't know how it moves. But it could take out this low, then go for this, definitely for this high, then go for this high, and then sell. Or if it takes out this low completely, then it will most likely continue. So if it takes out this low, it will come back to this and come and continue. Will never come back over there. If it takes out this low, expect it to go up, then go down. If it takes out both lows, it's just gonna keep cleaning this. And your first potential turnaround would be here, but most likely you'll go to the bottom. And then you gotta see, here's your slingshot candle. This is most likely the smart money trap, and you gotta see where the market shifted. And I can tell you the market shifted right here, which is 9-2 even level. So if we take out the low, I would expect it to. Why is it pink? Did I pick that color? I'd expect market come. I am just gay. Probably.
Out.
How do you do that?
A little pinky out.
Like this?
Like, you know, drink it, pinky out.
I don't know. I'm not gay. I don't understand.
Whatever.
Anyway, so give me a glass. I probably could do it when I'm drinking. Yeah, so just see what it's doing. And it's really close to it right now, kind of moving. It is Asia. It's kind of moving. So I would monitor a smaller time frame, see what reaction you get here, and go from there. But if we take out this low, don't try to fucking get in on anything here. That's just gambling. This is all suck you up, because where did the bank get in? Again, where did the bank get in? They got in here. Originally, they got in literally right there. Because look, again, smaller time frame right here. People see like 5 minutes, 15 minute. People see this as a break of structure because we took out this. And unfortunately, it's not going to work. I don't know. I wouldn't see it as a break of structure anyway, but some people do. It just kind of went slowly up. What a horrible price action. But it was an easy see, broke the high, came back, just an easy setup. Anyway.
Well, I mean, also it's the counter move, you know, first part. That's why we don't trade on Mondays. It's, you know, that was Monday morning, Sunday night. So
I don't know what's gonna happen. I hate predicting the shit, but it's either gonna do this or it's gonna break it and come back there. So it just depends what it does. See, right now we're going into the low of the range. So during this Asian right now until 11, next 3 hours, we will either take out this and come back, or we'll establish a new low. Okay. All right. I think we should be good for now. We went, of course, I thought it's gonna be a short stream today.
You knew
but
damn good
ended
well
up-
that wasn't gonna happen.
Well, I hope, guys, you got some value from both mindset talk, real talk, as I call it, and some analysis on deep analysis on EU and what to expect. As always, if you guys want to join our squad, hit us up on Instagram or Discord. If you want to join the bootcamp, hit me up or go to my profile. Ask any questions you want. We're always here to help. I hope, we're going to continue with Mondays as always. So always same time. So tip your waitresses. We got, for my guys on the call, I got so many good things for you guys. I'm just going to tell you, there's 3 bots that are coming to the furious snipers near you. There's a lot of good stuff happening. There's merchandise that's going to be happening. There's indicators.
This is what happens when you get a
indicators.
bunch of. This is what happens when you get a bunch of computer nerds together.
Yeah. I mean, I've been working like relentlessly. I've been getting 4 hours of sleep and not going. Plus working on mindset and all that shit. So guys, I put in a lot of work in this. All right. It was I enjoyed today's stream. It was a great stream. Thanks everyone for attending. I'll see you
Thanks,
next time.
everybody.
Cool.
What's up,
Thanks for
Alejandro?
your guys' time. Appreciate
Hey,
it.
is it your first time, Alejandro?
No,
Oh.
I've been to one of them, but like it was the first time I went, like, did the Furious Monday, but someone's chart was just crazy and I just exited out. So this is like one of my first times. So